Today, the topic that I'm going to discuss is about mutual fund investment for NRI. Can NRI invest in mutual funds, and what are the rules and regulations, do's and don'ts for the NRI investment in mutual fund? Uh, Basically, the answer is yes as well as no when I talk about mutual fund investment for NRI. The reason being, yes, in a general term, NRI can invest in mutual funds, but there are few rules and regulations that needs to be followed. For example, people residing in US or in Canada, a lot of documentation needs to be done for these type of people. So you will find that most of the banks as well as most of the wealth management companies do not prefer or do not entertain investment or mutual fund investment from these two countries. Having said that, for rest of the countries or for almost all the countries, it's a simple rule. Means you can invest in a mutual fund. You can need to do the KYC verification. KYC needs to be done, and post that you can invest in mutual fund. But for these two countries, namely US and Canada, there are a lot of obligations. So whenever clients try to approach from these two countries to banks or wealth management companies, they are a bit reluctant to go ahead with these type of investments for NRI based out of US and Canada. Now, having said that, to make an investment into mutual fund, first of all, you need to understand that you cannot make investment in foreign currencies. So the AMC doesn't entertain investment in foreign currencies, and that is the reason you need to open an NRE or a NRO account. Now, the basic difference is when you make an investment through an NRE or FCNR account, the amount or the fund is totally repatriable. So you can transfer it anywhere in the world. But contrary to that, when you invest through the NRO account, in that case, the maximum limit is 1 million USD. So these thing needs to be ascertained before opening the account, that whether you want to go for a NRE account or an NRO account. But these are the two accounts that needs to be opened. Either of the two accounts that needs to be opened to invest in mutual funds. If I talk about the taxation part, it's almost same. So there is a long term and there is a short term capital gain tax. For example, if I talk about the equity, if you withdraw fund within a year, then it is a short term capital gain, and where you need to pay a tax of 15%. And if you go for the long term, if that is more than 1 year, then you pay a tax of 10%. But there is a catch over here. So you don't pay the tax on the entire amount. So for example, just to make the thing simple, you have earned or you have gained 50,000 rupees from your equity investment. Over there, you don't need to pay any tax. Apart means more than whatever is apart from 1 lakh, more than 1 lakh. In that case, in that scenario, you need to pay a tax for the long term. If I talk about the debt fund, in the short term as tax applicable, and in the long term it is 20% without indexation. So that is about the taxation part. Even for mutual fund, there are two type of operations that you can go ahead with. The first is directly, so you can invest directly, you can take care of your fund directly. And the second option is through a power of attorney. So that can also be done. So you can assign somebody whom you trust in India, and he can take care of your mutual fund investment. So both these options can be followed when in respect to the mutual fund investment. If you see the current scenario, or if you see the last 1.5 odd years, the investment into the mutual fund from NRI has been exorbitant. So that has gone up to a huge extent, and that is the reason most of the people or most of the wealth management companies as well as the banks are now focusing on the mutual fund, because it's just like a one-stop shop. Means I have spent more than 23 years in the wealth management, and what I have seen, what I have felt is there is an answer for every question when you talk about the wealth management, when you talk about your finance. So when you go ahead with a mutual fund, there is an answer for every question. Means there is not a single person on earth for whom there is you won't find a mutual fund product. For everybody there is a product. So you take about the sectoral theme, taxation, large cap, mid cap, small cap, flexi, commodity, everything is included in the mutual fund. So everybody has got that option to choose the best mutual fund, best based on his risk appetite or her risk appetite, as well as based on his or her goal. So these are the most important advantages of a mutual fund, apart from it's very liquid. Now, why do we keep so much money on the in a bank? It doesn't make any sense for me. Means normally for a equity fund, if you are liquidating a liquid equity fund, the maximum tenure is t plus 3, so transaction plus 3 days. So within 3 days you get that money in your account. And so that is the reason, when I talk to my customers, I always say that you should have a maximum fund of maximum 7 days in your bank account. Apart from that, you do not need to maintain that much fund in your bank. I think it's better to go for a equity fund or balance fund, or if you are totally risk averse, even you can go for a liquid fund. Because in a liquid fund, the best part is you get the redemption amount in your bank, that will hit in your bank on the very same day. So just to sum up, yes, NRI can invest in mutual funds. Apart from the two countries that I have mentioned, that is US and Canada, they can also do, but there are a lot more limitations. There are a lot more constraint for these two countries to invest in Indian mutual fund for the NRI. The NRI, PIO, or OCI, everybody has got the right to invest in the mutual fund. You need to open two accounts, that is a NRE and the NRO account, or you can also go for an FCNR account. But most of the AMCs doesn't take actually FCNR account. The reason being that in FCNR account you need to maintain a foreign currency. So that is one of the biggest challenge. So mainly the two accounts, NRE and the NRO, these are the two accounts that needs to be maintained. uh, in one case it is reportable, in another case it is not, so they're subject to limitations. And regarding the tax, it's 15% for the short term for equity, and it's 10% for the long term. You need to fulfill the KYC documents. The KYC needs to be done. So again, the basic KYC documents are required for this. Once that is done, you can go ahead with, it means any type of investment. You can go for a lump sum. You can go for a SIP based on your profiling, based on your risk appetite, based on your income. So these are the factors that needs to be considered before going in for an investment. So anyway, go ahead with investment in mutual funds. If you have got any specific query, please feel free to be in touch with me, and I will be happy to share my thoughts with you all. Thanks, and have a wonderful day ahead.